Hey traders, Jeff Yates coming back to you from Full Throttle Trades. Want to give you a little bit of an idea of how we did on Friday in the AMT trade. Now, what I understand after doing this for about 25 years, many traders will never take the time to figure out how we do this. It's not difficult, but there is a process. There is a meaningful process you need to follow, and it starts with identifying that are better than average gaps. And again, we'll go through that here briefly just to kind of show you what that looks like on the page. There are a few different things that you have to kind of outline and underline to get those 5 or 10 stocks to have the greatest probabilities. Watch how we did this. Learn from this. It's very, very, very particular. All right, once again, welcome back here. Again, we took AMT on Friday, and tomorrow I'll actually do, in a couple days, I'll do another video of the AVGO, the Broadcom trade we did today. Now, this has nothing to do with options. You could trade it in options. We trade options. We trade a lot of different variety of derivatives within our network at Full Throttle Trades. But we start off that first hour of the morning. We get it when it's getting good. And that's when that momentum and that gaps are starting to kind of allow us to find some really cool entries on day trades and capitalize on the parabolic moves often. So AMT trade we did on Friday, 3.8R winner. 30 minutes. It was a bit longer than 30 minutes in here when I look at the final one, but majority of it done at 30 minutes in here. Again, we exit out here with about a little over $1,000 profit. Now, here's the cool part. The most at any time I have at risk at this trade is 250 bucks. I have 500 shares because I'm adding in. I'm leaning into the trade that actually is moving forward, but I'm not adding on the fall. I'm adding as the win happens, and I'm adjusting stops along the way. The cool part is about that slightly over a 4R Sharpe. A lot of people say if you're doing 2R Sharpe, you're good, and you are. But the reality is we're striving for 3.5 to 4R Sharpe, so 4 Sharpe ratio, because we want to make sure that if I win once, I could lose 4 times in a row and be break even on my trades. Let's dig in. AMT, here we are. Obviously, this is, as I always point out, trading's risky, involves risk, options, and stocks specifically. This should not be considered financial advice or no guarantee of results. And what I'm showing you today does not guarantee that you're going to make it tomorrow. But it does show you a strategy, a concept, something that you can duplicate day after day. Trading options can have financial risk, strong, substantial financial risk, and it's not for everyone. So let's move on. Anyway, we took the climb on AMT, and this is important. If you look back in here, we had a parabolic drop. What identifies the climactic? Either A, you have 5 red bars, or B, sometimes you have a green bar sandwich in here. So what you do is that you still count it, but you count the lower highs. So 5 lower highs or 5 green bars. In this case, I didn't have 5 red bars. Didn't have 5 red bars in a row, but I had the lower highs. Here's the cool part. I saw volume beginning to crescendo down here. We have to make sure that volume is at least 2x average 50 on here. And we're about 1.8. And we were gapping up in 75% of the bar on a 10 bar, meaning that very few of the traders came out of that. You see the little tip? That means when this thing gapped up north of 50%, in this case 75%, it trapped more sellers than normal. So what happens, they short cover, and we find an entry on the pullback, the short cover and the new buy-in, and it sends our stock right up to the atmosphere. Watch this as we took this trade. So parabolic drop. We were also, the exit was from the 8 EMA here. Notice the pocket in here. You see that? When I get prices extended from the 8, the way I tell our room members is this. I said, price doesn't like to be far, the kids don't like to be far away from the mother. The mother doesn't like to be far away from the kids. This is the mother, here's the kids. And they work their way back up and try to touch that as much as they can. Not always touch it initially before double bottoms, but that's when you create that gap, that pocket. The market's going to try to fill that little bit of void between the 8, maybe even in the 20, but this, and the 20's up here, 21, but you can see the 8 specifically, you can see how it's kind of moving back up in here. This thing dropped from 210 to 180. We took it on the bounce, we took it on the gap up after climactic volume with all the short covering ahead. Take a look. After a parabolic drop, best case is 2.16. What do I mean by that? We have a parabolic drop. You are not going to be bottom in here, okay? 99% of the time, this thing is going to go to 21.6. It's going to roll, okay? If you aren't taking profits before that or at that area, then you're going to have to take the downside, and then hopefully it bounces back up. Know that one thing right there: parabolic moves do not run 38.5%. They do not run 50%. They run 21.6, period. Now, does it happen occasionally? Everything happens occasionally, but generally speaking, you want to push this thing back to the 21.6. You want to be selling that puppy and getting the heck out, because everybody is going to be pushing this back down. So number one, sell it back at the 21.6, and you need to find your day trade that matches that as well. Take a look here. Here's the entry on this. We took the 50 fib. Here's the gap up in the morning, 5-minute time frame, the pullback entry at VWAP. So look at the two fibs in here, 50% and 61.8. I was telling the room members, I said, there are some people that will take it over that topping tail, because isn't a move higher than a topping tail a bullish event? I have to agree that it is. However, if you look at this in context, many people get trapped in those areas. They look to sell into here, test, retest, took them out once, and then right back down. I said, guys, we are not in here. We're going to wait. And if this thing goes from here, so be it. We'll find something else. It pulled back at that point. I looked at the open line, the top line. I drew the fib line. Okay, we're going to be entering this trade. Also, where is the VWAP is where I'm trying to identify this on a 5-minute or any chart, but on the 5-minute chart, I want to identify where maybe the 5-minute EMA is and VWAP. And I want to kind of find an equal balance in there. I want to find out what would be a good stop based on the 61.8 fib. So we entered right here at 182.75 on the pullback into VWAP and the struggle. The tail's coming in. So we knew this was a pretty good place to head into. We entered about right in here, this third bar in. It sat there, then it took off. We put a stop a little bit more. I believe it's only $1 stop. We could have used, 75 cents, but I didn't want to chance it because this was down to 100%. I didn't figure it was going there unless the market pulled it in, but I figured we'll at least give it $1 down in here. And didn't even use, I think it pulled back to 51 cents if you look at the chart here. So 182.75, it only pulled back about 24 cents, but we got up here around 183.5, 184. When even, 184.5, 185, it actually went to 186. We got out at 185.70 or something like that. Went up a little bit higher, 186.50 in here. But the cool part is that we didn't have a lot of risk. We didn't have a lot of stop in here, but we capitalized. We kept our loser area small. Here's the other thing to remember on this. We actually had this pullback. We had this in here only with a 250 risk. Now, a lot of traders, a lot of amateur traders end up adding the pullback to better the cost average. I'm here to tell you, if you're doing that, you're going to win some, but at the end of the day, you're not going to go forward as a trader. Guarantee you. You need to fix that. Add into the winning, lean into those winning trades. Don't try to fix that one. The only time I would do that if I just think it's coming close, and a lot of times I'll miss it if I'm not taking a buy setup here. I'm trying to catch the drawdown, not the buy setup in here. Sometimes we'll miss it. So what I'll do is I'll piece in a quarter and a little bit more of a drop piece in a quarter. That way I'm not too far away from my original stop. If you're adding on the drawdown in here and you're not going anywhere, that's why. Fix that and your trading will get better. So it came up in here, we added on the loop. Again, this was already predetermined. I don't have it on my thing, but one day I'll show you. I have a predetermined management tracking sheet that actually shows me where to enter, that we developed, where to exit. But here's the thing, that's all well and good, and I start off with that. But like on Broadcom today, if the chart says get out, I get out. I don't care what the mechanics say. Mechanics doesn't know an R. Mechanics doesn't know it's 3.5, 4 up. The chart knows that. You see where it hit a little bit of this innocent supply in here? Pull back, still had giddy up and went higher. We stayed in the trade all the way up to this area here, which is slightly further in here. So killer trade, 250 risk or 250 exposure. There is a difference between risk and exposure. 250 exposure, but it's a $500 risk, right? So in other words, I'm trading on the ad as if I'm 500 shares all in. I'm making that up on the climb as it moves up into here. And we have a very specific way we do that. All these trades are done live in our trading room before they trigger, within 30 seconds or a minute, where our stop is, exactly where we add, where we counter moving up our stops. We're going to trail off certain time frames and obviously certain moving averages. And then we're looking for a 4R win every time in the back. And again, you come out of the box with a couple of these, you can be up 810R for the week. That's 40R if you count 40 times your risk for the month. So if you're trading $100 risk, that's $4,000 gain potentially, right? Doesn't happen every day. But you want to find is the AVGO was much the same. In a couple of days, I'll do a short presentation and show you how we got that pullback. We nailed it. We actually, that mat glitched 3 times today. We got that here, went up, came back down, raised stop, got out at a quarter win, took the retest at the bottom. Nothing had changed in here. It was still strong in the market, relative strength. Took it again, had a huge run, even got out a little bit early, right? Because of supply, and it kept going. And we took that on a weekly spread using a bull put credit spread down here at the 222.50s by the 217.50s. And that's already 2 days to go before the market closes. Wednesday is closed with Christmas, and we're already up, closing on 50% here in the last hour. So anyway, good trading day. This is day trading the stocks. If you want to do it with options, you can. Come to Full Throttle Traders. Just learn the concepts of what we're doing here, right? This doesn't change. This is the same because it's based on fear and greed, supply and demand. People don't change. All we're doing is trading the reactions of people in these candles, right? And that creates the lift. Does it work all the time? I like to say that it does, but to be honest, no, it doesn't. But we just want to get the edge. We're trying to get that edge. We need a good stock. We need clean trading. We need a lot of volume. We need to see some relative strength or weakness. We need a clean pattern above. We need a clean gap. We need to see that short covering come in. We need to buy on that dip and put our stop relatively tight in there and rocket that thing up. And we're starting to add and then take, sit back, trail. We take the lion's share back up about 4R or so. So hope that was helpful. Enjoy the great trade today for a lot of our team members and whatnot. Come check us out at Full Throttle Traders. You'll get these every single day. And again, this is only about 10% of what we do. It's just kind of how we start our day with a nice $1,000 win, and then we move on to actual trading in the options market. So anyway, thanks for being here, guys. Enjoyed it. We'll see you next time.